1 to 3 trades every single day in order for them to make some money or just make back losses from the previous day. Because the majority of the scalpers will lose the majority of the time because they're taking a lot of trades constantly. And scalp trading is actually the most attractive type of trading that beginners kind of approach to it, because they just passionate about trading and they want to be in front of the charts as much time as they can. So they approach scalping thinking that's going to be the best way for them to make money. Next, it leads me to day trading. So I'm sure we've all heard the term, oh, he's a day trader, or I know a day trader. Well, it's actually a very common term because it's what the majority of the people that work a 9 to 5 attempt to do. Because for you to be a day trader, you pretty much have to be in front of the markets while you're in a job. So people kind of treat it as their side income. And day traders are usually in front of the markets a little bit less time than scalpers, but they are definitely taking a lot less trades. They would be taking maximum 1 trade every single day, because anything more than that, you fall into the category of scalping. And day traders are a bit more selective when it comes to the trades, and their trades can last anywhere from 1 to 3 days to play out. Unlike the scalpers, that their trades can last anywhere from 1 to 2 hours. So day trading, your trades are actually being held 1 or 2 days compared to scalpers, which is a little bit of a time. Next is going to be swing trading. So swing trading is actually a approach of the market where you are swinging the market, meaning you're just chilling. You're going to be in maybe 1 position a week, maybe 2 positions a week if you find a good probability trade, and you'll hold it throughout the weekend. So you'll be in the position for anywhere from 4 to about 8 to 10 days. And these positions usually run a lot longer, giving you a lot more profit. And you actually have to do a lot less work. You're probably in front of the markets for 1 to 3 hours every other day. You don't have to be involved in the market that much, because as soon as you enter a trade, you're pretty much letting your trade ride, and so it goes in your direction or against you. But swing traders are taking a lot less trades, but they are risking a lot more compared to the day traders and compared to the scalpers. And swing traders usually tend to have the highest win rate because they're being very, very selective on the type of trades that they take, because they're only taking anywhere from 1 to 2 trades a week. And then next is going to be position trading. So position trading is a trader or investor that pretty much enter a trade with a long-term vision. They want to be in the market for anywhere upwards of a month, and they are not looking to liquidate their position anytime soon because they're treating it as a investment, as a position that they're entering in the market. So they're prepared to be involved for about 1 to 2 to 3 months to just simply have their trade get as much profit as it possibly could be. And position traders or investors, they'll probably take 1 to 2 trades a month, if any. Usually they stick to 1 trade a month because they are looking at the market long term. They're not looking to have any short-term gain, and they're looking to minimize their losses as much as they possibly can. And investors and position traders are actually the ones that lose the least, because even if their positions go into a loss, they're going to continue to hold it long enough until it goes into profit. And if you hold a trade long enough, it will go back into profit. So as you can see, every single format of trading actually scales up on the amount of time that you're actually holding a position. A scalper is involved in the market anywhere from 1 to 2 hours a day. A day trader anywhere from 1 to 2 to 3 days in the market. And you have a swing trader where it's anywhere from 4 to 8 to 10 days. And then a position trader where it's upwards of a month. So every single different type of format in trading, they are actually holding their trades longer, but they're actually taking less trades. So as the formats, they scale, so does the time they hold the trade, but the amount of trades they take is a lot less. And all of these different formats you can actually apply to all of the markets. You can apply it to foreign exchange trading, to commodities, futures, options, crypto, everything that has pretty much a chart with candlesticks that go up and they go down. But the best one and the one where I've had the best experience and the most success is going to be Forex trading. That is because it offers the best things that no other market can offer. It has 24/5 access, meaning you can trade Monday through Friday, any hour out of the day. So if you work a job, you can trade when you get out of your job. If you're up late at night, you can trade late at night. If you're up early in the morning, you can trade early in the morning. Compared to, let's say, options or stocks, you can only trade 9 to 5, which kind of sucks because if you have a job, you can't get involved in the market. You're simply limited to what you can actually do in the market. The next reason why it's my favorite and why I got involved is because the entry barrier. For you to get started in Forex trading, you can start with as little as $100, or compared to the stock market where your entry barrier is going to be $25,000 as your minimum first investment. And I don't know about you, but when I first started trading, I did not have that kind of money, so I simply couldn't get involved. Another reason why it's the most reliable is because you're literally trading money. It's impossible that the currencies of the world simply disappear from one day to another. If that happens, we're in a big problem, but that will literally never happen. Compared to a company in the New York Stock Exchange, they can simply just go bankrupt one day or get sued and you're done for. Or a crypto can pretty much get rug pulled and all your money is gone from one day to another. The currency exchange market is here forever and it is going to be here forever. Countries run on these currencies and they need to do that for it to keep going. For that reason why the currency exchange market only gets bigger year after year. And the opportunities are going to be there forever. And adding up to that, you can actually get involved for free. You can actually test and apply the markets and try and figure out if it's going to go up or down with fake money. You can use demo money to test your skills and learn it before you actually put real money at risk. And when I was trying to get involved in the crypto market, this simply wasn't a thing. They don't allow you to use this with fake money. It wasn't even an idea. Versus in the foreign exchange market, not only can you access it whenever you want, you can actually test it with fake money, which is actually really cool. And if you don't know what demo is, it's pretty much simulated markets. It's demo. It's not real money. It's paper trading, fake trading, where they just give you fake money in an account where you can get in and pretty much go test it out. So if you want fake $100,000 and you want to test out your skills, you can do that. If you have $5,000 to put into the market and you want to test out your skills first, you can create a fake account with $5,000, which is actually amazing. So that way you can actually see how far you can get with demo money, so that when you're ready to deposit your own money, you're ready. So now that we understand how the Forex market works, a very simple way, we have to understand how can we actually execute into these markets. What platforms are required? What platforms should you look at? What platforms shouldn't you look at? And this is where it can get a little complicated if you don't have the right video. And that's why everything is inside of this video, which is going to teach you the only platforms that you're going to be needing in order to be able to execute trades in the market successfully. Now, there is hundreds of different platforms. There is thousands of different people directing you to different places, but these are the only platforms that I have personally been using for the last 7 years trading in the markets, and I have never ever needed anything else when it comes to actually executing in the market other than these platforms. And I've made probably around $10 million on just using these two simple platforms. You do not need anything else other than these two platforms that I'm going to be explaining now. And then obviously a third one that you will have to do your own due diligence on, but this is going to make sense in just a second. The first platform is going to be TradingView. So TradingView is pretty much what its name says. TradingView. You're going to view the trades on this website. This is a well-known website, I think used around about 80 to 90% of the market. And this is where you're going to be actually looking at the charts. This is where you're going to be looking at the markets going up, at the markets going down. This is where you're going to look at the markets, for example, Euro USD, how we were setting an example, GBP USD, GBP CAD, so on and so forth. Now, this platform is strictly and only to simply just look at the market. This is where you're going to be identifying if you're ready to buy or if you're ready to sell. But you will not be entering a buy or sell on this platform. It's something that the platform offers, but I personally have never used it. Neither has anybody in my community, or I've heard anybody of ever using it before. It's something that they offer, but I personally rather stick to the different options that I'm going to share with you now. So TradingView, to keep a very simple example, is just somewhere where you can view the charts. And this is a platform where you're only going to be looking at stuff. You're not going to be executing other than just things you will be drawing on the charts to identify if there's a high probability of it going up or a high probability of it going down. This is where you will be doing your charting. This is where you're going to pretty much spend, I'd say 90% of the time that you're in front of the markets will be on TradingView. Because when you actually execute a trade, it will be on a different platform. And you're not going to be looking at the numbers on the screen. You will simply be looking at the charts, because what's on the charts will reflect on the numbers on the screen, which will be on your phone or your computer, wherever you decide to actually take the trade. But TradingView is simply just so you can see the charts, whether they're going in your favor or against it. And the simplest analogy that I can put is like you right now watching this video. You're watching this video to intake the information that I am giving you, so then you can learn and then you can go execute in the market. But you're not executing a trade on YouTube. You're not doing anything on YouTube other than simply getting educated and absorbing the information that I am giving you, or that you're simply watching on YouTube. And you can watch the video in a bunch of different formats. You can watch short-term videos, you can watch long videos like this one, you can watch it in theater mode, in full screen mode, or on your phone. So there's different types of ways on how you can intake this information. It's the same exact thing with TradingView. You're looking at the charts in a bunch of different ways, so you can intake the information so it can tell you if you're ready to buy or if you're ready to sell. But you're not doing anything other than just looking at the information that the market is sharing with you on TradingView. So let me actually take you to TradingView just so you guys can get a very simple insight